Hello, we are live. Welcome to our new Elliott Wave webinar. It's July 14th. It's Monday, 3 p.m. here in Central European time zone. Hope everyone is doing fine. Just let me know if you can see the screen. Can you hear my voice? Okay, so I can see Hassan and Brian are here asking for some markets. Enes is here. Arevalo Jr., Mohamed, hello guys. Tax Solutions. So, okay, before we go to the markets, just let me two things. Now, the first thing is that we are seeing a lot of impersonators, as you know, on their just going absolutely crazy on X and on Telegram specifically. So if anyone from my name contact you and will give you some advisor, some anything that will guarantee your profits, please make sure with who you are talking to, okay? Because I will never DM you, will never ask for any kind of money. So if you see anyone with my name trying to contact you, please don't fall into it, okay? Always look for our website and do communicate through official our social channels, which by the way are all can be found on wavetraders.com. okay, so be very careful because it's very hard for us to follow everything here. They can be removed maybe in a few weeks. On Telegram it's very difficult for them to be removed, so you have to be very careful out there and don't be naive, because there is absolutely no easy money and guaranteed profits at all in the markets, okay? So what we are doing here is just providing my own views, doing analysis, and then it's all up to you how you will take advantage of my personal views, how you will look to participate in the markets, okay? Now, the next thing is that for those who are here for the first time, we still have this obviously stocks, US stocks, single stocks in beta version. We are covering a lot of stuff here. This report is sent out a few times per month, so make sure to join the community. It's absolutely free. You will just have to register, and then you will be able to activate free access until it's available. I'm not sure if we will have this running forever, or maybe there won't be just simply not enough of interest and we will just turn it off. We will see what will happen in a few months, but definitely that's something that community and our readers want to have. And for now, everyone is welcome here, and you have available for free access until we go, maybe if we will make it live, until we go to paid version. So for now, for the next few months, obviously it's free for everyone, okay? No obligations. So what's happening? As you know, during this weekend, Trump has announced 30% tariffs on all of the imports from Europe and Mexico. But of course, that's, I mean, we always here's some kind of this kind of news, but there are still ongoing negotiations. There are, can see that from both sides some optimism. So of course everyone is looking to get the deal done, the trading deal done, so that will be beneficial for both parties. But still, it's some uncertainty. We have seen European shares, particularly DAX index, have seen some reversal to the downside. But keep in mind that there will be even more headlines on this topic in the next 2 weeks, and maybe there won't be just an easy breakthrough until some trade deals are confirmed, maybe in the last day before August 1st deadline, and then we can see maybe some very interesting moves going forward. Now tomorrow we have the US CPI, also Canadian CPI, and then I think 1 or 2 days later the UK CPI. So there will be some interesting moves, of course, in the markets. Now, before we go some to currencies, I want to look at crude oil versus the US CPI. As you know, usually crude oil is a very good indicator for inflation, but keep in mind that crude oil, if you take a look maybe on a smaller time frame here, that crude oil has basically been very volatile, both-sided during June. So you can see that here we have seen a very strong move to the upside, then a very sharp drop. So very unidirectional moves through June, meaning that it's very hard for me to rely on crude oil and trying to predict what can be the outcome based on crude oil moves and the US CPI. But still, the inflation is expected to tick up to 2.6 from 2.4. Okay, so I still think that there won't be any kind of a rate cuts in the near future, especially not if inflation is really will come here around these figures. We know that Trump wants Powell funnel to cut, but based on the data, based on jobs, of course, that's unlikely to happen in the next few months. Maybe we'll see some interesting new decision, maybe later this year, but for now, I just still think that US treasuries could maybe move sideways until we get some clearer evidence what Fed may try to do next. If we take a look also on the 10-year US notes, we are still basically now trading in this triangle formation here, not really breaking out yet. So as I said, maybe we will stay stuck in this range for a bit longer, but when this triangle is completed, maybe that's when also dollar index, which is just a second here, then dollar index will finally maybe try to complete this bearish leg, which I, by the way, think it's in very late stages. Now also when looking at the TLT, this one also looks like it's having some room for more weakness to complete this ending diagonal. So it really suggests that treasuries bonds could remain in this bearish sequence for now. And of course, it's not really showing us evidences of a bottom yet, and it really means that maybe we will see another push to the upside on the US yields. But if there would be, because of some trade deals and economy will expand, jobs will be fine, inflation under control, then definitely we could easily see that the US yields could really start moving higher. Now, if we take a look on dollar index here, as you know, maybe we can revisit this one. I've been talking about this in the past, how basically the bull run, the bull phase finished here after a broken trend line. We have seen a pullback towards the trend line, then another push higher, and a lot of optimism was here definitely visible, especially through the euro dollar charts, where we have seen a lot of pessimism going on. So everyone was so bearish on the euro dollar, and that's when the sentiment has basically changed, and now we have a very similar situation on the flip side here. So maybe we are coming into very late stages of this impulsive decline. I'm not saying that we are going somewhere back towards 115 or so, but definitely I would not be surprised if we try to see some type of consolidation here, maybe already starting in August. But for now, we are not seeing a completed downward structure fully yet here, because if you look at the impulsive wave structures, keep in mind that wave 5 should also contain 5 waves, okay? But wave 5 is usually much slower compared to the third wave, okay? Third wave is usually, let me delete this, very extended one. So it's basically a very normal wave structure. We can see that this one is now, that bears here are already losing strength because you have plenty of overlaps. But maybe we're still missing the final leg to the downside, maybe even with an ending diagonal. So 95 level maybe could be quite interesting potential support, and then we see what happens when maybe summer ends. We could see some changes in the markets. Also, if you look at the COT data here, positioning from the large speculators, you can see that we are now approaching to these levels 2016, 2017, 2021, and we are basically down here. So again, if we move even further into the extremes here, then most likely we will see some reversals in the markets, because even at some point, of course, dollar, if will be too weak, they will try to change this trend around, definitely. Now looking at the euro dollar, is also trading higher in a fifth wave. Of course, it's the opposite compared to dollar index. But if you look maybe in a smaller time frame here, you can basically see that we have here a lot of overlaps. Okay, so I think that one more leg is missing here. We could see another push to the upside. Now, because someone will get frustrated here within this downward channel, maybe it's better just to wait on some very nice bullish candle and daily close somewhere around 1.730 to see a very nice break out of this bull flag. Then of course this could take us much higher into wave 5 here. Okay, so for now it looks like that we are still missing this leg, but if we see a break towards 1.15, then maybe I will have to adjust the wave count and maybe even try to look for a completed wave 5 up here. So basically we are dealing with the very late stages of this impulse from January. We already have some divergence here on the RSI, so very classic evidences that we could be in some very late stages of recovery. Maybe it's worth to mention also pound. Now keep in mind that when you have important highs and reversal, usually a lot of markets will move into the same direction. Okay, but then when you see an important top forming on the markets across the different markets, then some will find the top earlier than others. Okay, and it means that not all of the markets and currency pairs will reach a top at the same time. And maybe cable is the first one that shows us that we could possibly be seeing already a top here. I mean, we have a pretty strong pattern here. We know that ending diagonals are reversal patterns, so it's definitely something that we should not ignore. Okay, even if we can be wrong sometimes with this kind of a call, you always have to be very careful when you have this kind of a price action at the end of very big move here. We also stopped at pretty key fib levels, so I would not say that we are back in some kind of a bearish trend that will last for months, but I just think that it's worth to observe for potential deeper correction here in 3 waves, maybe even back towards 1.312 still sometime this year. So on the intraday charts, watch out, maybe if we get some bounce, maybe even away from that current trendline support, then maybe this is a pretty nice resistance at around 1.36 to 1.3640. Or there could be another scenario very possible if we see a straight break to the downside, then after some rebound, which at some point will occur, then this resistance, then this trend line can become a very nice resistance on a retest from the outside. Okay, so when it comes to cable, I really would stay aside. I mean, even if you think the dollar still has room for more weakness, because we just went through dollar index, which could tell us that maybe there is, and the euro dollar, that there is still more dollar weakness, I would rather avoid pound. But if dollar would really start breaking higher, euro to the downside, then I think that you will have a very good idea which or what you could trade, especially if we consider that pound is very weak already now, and what could happen if dollar suddenly turns around. Okay, so you just have to need to have some different scenarios here in back of your mind, because I really think that in a few weeks we could see some solid correction on the dollar. Also, if you look at maybe pound Aussie, or some those crosses are making some very interesting moves. We have seen some turn to the downside. Looks like that there is plenty of room for more weakness, at least in the short term, maybe to retest the lower trend line of this Elliott wave impulsive channel. So I think that we came out here from running from a small triangle, or maybe even something else if we get more aggressive sell-off, but certainly this looks like an unfinished business on the downside. We of course always update those pairs also on intraday smaller time frame for our members. So if you're interested, then make sure to visit us at wavetraders.com. Also looking at EURUSD, I think that we talked about this in the past. We topped out at the 61.8% and now retesting the lower side of this channel. So this one also shows that we could possibly see more weakness here in the upcoming weeks. Also dollar CAD, this one has made a very nice extended leg to the downside, and now it looks like that we are in a corrective phase here. Still, in my opinion, this is an unfinished downtrend, but the resistance levels is yet to be retested a little bit higher. Usually the 38.2% is something you should look for when it comes to wave 4, that you watch the fib levels against the previous extended wave 3. So this comes in around 1.39, and as long as we are trading below 1.4150, I think that this could be a very nice zone for potential new sell-off into wave 5 there. Okay, so maybe if dollar will keep consolidating, maybe dollar CAD is something to watch for further rally here in the next few days. But don't forget on the data, on the inflation data from Canada, I think, as I said, tomorrow. Also looking at gold now, last week, as you know, we talked about gold, specifically we were focusing, if you recall, on this breakout here, and then what we have seen as a retest and a pullback towards this channel. Okay, and it was a perfectly played. Firstly, when we were making a webinar on Monday, I think that prices was down here, but I said that that was a weekly open. Usually this will be fully retraced, and it happened actually perfectly before market came once more to the downside, and we have seen then another retest of important trend line and a very beautiful recovery. And I think that there is some room left in the near term, maybe to complete this third leg to the upside. Maybe we even can see a sharp break out of a very big range, but I would keep an eye very closely to 3,400. Okay, that was a pretty strong resistance a few times here in the past, and also that's the area where wave C, if suddenly that's only an ABC rally, would be equal to wave A. So that's certainly a very important level for this week for gold, around 3,400. But if we start breaking above 3,440, then I think that we are already progressing higher into wave 5. So if someone is long gold, maybe not bad idea to be aggressive on stops if you start moving into this resistance, and then let the market decide if we really want to break out, or maybe we'll pull back down. But if we'll be stopping up here, then I still think that interesting opportunities will show up either after a small wave E pullback or maybe even deeper wave C. Also, I think someone asked Brian, who was for silver. So if we give you an update on silver, maybe the daily chart, I mean, we discovered very nice, beautiful ABC setback here a few months back, and we have seen this as a wave 4. And then we said that, look, new highs should be seen, not sure how far can go. Our levels were around 38, 39, and we are still progressing to the upside. But definitely we are seeing that this sentiment is now coming into the phase of optimism. Okay, and if you look at this Elliott wave cycle, you're in a fifth wave. It's definitely not the place where I would be looking for any kind of a new opportunities on the long side. If you are looking, if you're more short-term trader, maybe you should be aware of some retracement, even if you are holding positions that will last for months. Of course, that's once again not the area where to look for potential opportunities. If you are long, then you just maybe will have to consider to book some profits, or maybe if or maybe even be aggressive on stops, because we know that after 5 waves up, market could always slow down. And if you look here on a higher time, even higher time frame, we are now at between 61 and 78.6% fib retracement, and we still have, by the way, 3 legs up from that low. Maybe that's wave 3. I cannot say that that's wave C, but we are moving into some short-term resistance where at least temporary pullback could show up, because as we said, we can count 5 waves up here. And even in a smaller time frame, what's maybe even the most important when it comes to the price action for the next week or two is that we are coming out of a triangle. Okay, triangle occurs in a wave 4, not in a wave 2, meaning that you won't see any kind of extended wave 3 to the upside. So whenever you see moves out of a triangle, be aware, especially with this sharp price action, when everyone tries to ride this wave, a lot of traders will usually be late, and when it comes to some overcrowded trade here, the market will make a pullback. So I think that we are not that far away. Of course, the big levels to watch is is around 40. It's where we have this triangle measurement target. So I took the distance of a triangle, measured it and projected from a breakout point, and we come out with 39.45, and then you have 61.8% of wave 3 measured from end of wave 4, and also the upper side of this Elliott wave impulsive channel. Okay, so this zone up here definitely very important one. I'm not really convinced that we will see a straight break higher. Of course, anything is possible, but as I said, you just have to be a bit careful up here whenever you can count 5 waves up. Now, if we also take a look on German DAX. So what happened in German DAX, as you know, because of a lot of uncertainty, and because Trump is threatening with tariffs from August 1st if trade deal is not reached. That's why we are seeing this kind of a reversal here. And I think that there could be a lot of choppy price action, back and forth moves till August 1st, when we maybe could see some clearer breakouts. If everything will be finally done and behind, then market could start moving much more easily in a particular direction. But when it comes to the Elliott wave principle here, I mean, that looks like it was a free wave move to the upside, right, to a new high. We just barely touched the highs, and then the next day we have seen a reversal lower. Now we are even trying to break the lower trend line support with impulsive price action. So I think that we are still in the middle of potential wave 4 correction, and if that's the case, there are 2 scenarios that I would pay attention on. Potential running triangle, where wave B can move to new high, or maybe even a flat correction where wave C can fall all the way back to wave A levels. Okay, so 23k still would be very strong support even if we drop towards this level, and that's what that's 3% or so. It really looks like it's a very big move, but in percentages not really. So still, this would be a pretty interesting support. But what is the most important here is, if we are really in this wave C of a triangle or of a flat, we need 3 waves down. Okay, minimum 3 waves down. So I think that more weakness could occur after potential some bounce in the near term. Maybe even this gap from the opening of this week could be pretty nice resistance around 24,200. So I really assume that in the short term you should be aware of more weakness and deeper price action. But still, maybe that's part of a higher degree part of a higher degree consolidation that belongs to an incomplete uptrend. Okay, but when I would be ready to call a top here, if we start aggressively falling below these previous wave A levels, and then suddenly we see, let's say, weekly close below that level, then I would think twice what may happen next. Okay, and definitely would adjust the wave count according to the price action instructors. Now, if we take a look, some of the single stocks, as I said, if you're not our member yet, you have still free access to stocks. Okay, you can download our report where a lot of big US single stocks names are covered, and I will probably do some updates in the next few days. So if you want to have some fresh updates, make sure to register on our website, and you will be able to download the report from our website. Now, if we take a look, maybe firstly on Bank of America, because I think that yes, this week we have the earnings release. So basically I covered this one in one of the reports in the past, and as I said, when I compared the previous pullbacks here, each pullback was around 8 to 10% before market moved in, continued within the higher degree trend. So clearly now this trend is very easily readable. It's bullish, right? And I don't want to chase markets at the highs. I want to wait some kind of a pullback. So if we consider what's the personality of this market and usual pullbacks in percentages here, when you look a bit back here, then of course I would focus on slightly lower levels. Also, I can count 5 waves up to a new high, so I think that this correction could possibly show up, and because we have earnings this week, I really would not be surprised maybe if we get with some volatility, some deeper price action. But a very nice support could be around $42-43. Also, there was some gap here from May, and maybe that's the very interesting support right at the former wave 4 here. Also looking at eBay, I think we also covered in one of the reports this one. It's coming very nicely to the upside, still within higher degree impulsive trend. Of course, we could be riding higher into wave 5. And what's interesting, if you scroll back a little bit, we still haven't seen a print of a new all-time highs. So that's very interesting, because you know, when you're such close to new all-time highs while you have only 3 waves to the downside, that's, I think, like a magnet here in the short term, because obviously we have seen also the broken channel. It would be a different story if there would be an impulsive sell-off, not from here but from around 78 or 61.8% fib retracement. Then of course I would be completely on a different path here. But because we are that close on a higher time frame to these all-time highs, I just think that there is really a good chance that we will retest these levels within upcoming 5th wave. Now also if you look at Coinbase, I think we covered this one in the past, still very nicely in uptrend. Maybe we'll see some irregular wave 4 formations. That's something that I would look for, because wave 2 here was relatively small and not irregular. So if you consider the rule of alternation, where wave 4 and wave 2 could have different substructures, then of course that's something you should be aware of. And in such case, I think that this could be a very interesting support, the previous swing high. And then if you look back, it was a very nice key level here from end of 2024. So we're still here in a very good uptrend, which I think could resume above 400. And as I said last time, that was the only time when Bitcoin was basically firstly lagging a bit, but now finally trying to follow the other markets here to the upside from the same sector. So I think that Bitcoin is also, and cryptocurrencies are doing pretty well. And even if you look at MicroStrategy here, we are also not at the highs yet. Okay, so I still think that we are going to take these highs out, but if we will be able to count 5 waves up then towards 600, well, up here, as you know, you should be very careful. Okay, you don't want to buy here at the highs, you want to book at the highs, okay, or just keep pulling stops closer into your profits rather than chasing markets at a new high. So until we reach these levels, of course, we would expect that cryptocurrencies will do well. Also looking at nvidia here, that's what we are looking for. We are at the 261.8% extension of this wave 3 where we could possibly slow down, but whenever these wave 4 pullbacks will show up, it will be just a temporary pause again within the uptrend. So looking at Bitcoin itself, to see the market cycles that we are in, basically we were tracking and also showed you 2 wave counts here in the past. Okay, so we said that even if that's an ending diagonal, we are expecting more upside, because in ending diagonal each leg should be made by 3 waves, right? A, B and C. And if you look at the current breakout, looks like that we are definitely trading in a wave C, and wave C could sometimes be similar to distance in wave A, especially when you have that upper trend line comes in right at this equality level. Okay, so 140, 150, that's a pretty big level up here. Don't just follow blindly the bulls here, because you never know how markets can surprise. Just be on the watch for potential resistance. Of course, we can easily break through it. We also have another wave count up here, but as I said, both suggest that 140, 150, this could be a pretty next very big level, while the market is trading above 110. If we start moving back below that level, then you know that things would change around. But for now, looks like on a smaller time frame we are in a pretty healthy steady recovery here. Notice that we have still an unfinished business on the upside, so even if that would be wave C, as I said, up from that June lows, still should be structured by 5 waves. So watch what to watch on a retracement. Definitely the area of a previous 4th wave, so in such case is around 1700, 1800. That's the area to watch for if we see pullback into that zone. But of course, when this wave 4 will finally start unfolding, you just have to use the Fips as well, maybe to try to find some Fib confluence. Also, if we take a look here, Bitcoin liquidity pool, we have some, as we said last time, some big orders around to 120. That's basically right now right here. Then we have above the updated data shows 125 and then even 130, and then you have some big levels up here around to 160. So it's definitely something to watch for. Maybe this in the near term, when I look at this pool up here, maybe that could provide some near-term retracement in a wave 4. That would be something totally normal. Looking at the Ethereum, this one, as you know, is breaking very nicely to the upside. Last time we showed you this potential head and shoulders bottom formation. We are seeing a very successful strong break to the upside. Of course, we could retest this neckline. That would be very nice around 2850, and then watch out for another push to the upside. Now, when it comes to the head and shoulders patterns, and you just look at the head and shoulders without considering the Elliott waves, because maybe you're just not looking at the markets as in Elliott waves, then you would be looking for targets even above 4,000, because that's the head and shoulders target when you project it from a breakout point, right? But when you're looking at the markets also from an Elliott wave perspective, then you should maybe also keep an eye on C2A target, because what if this is only an ABC rally? In such case, 3,500, 600 is the next level to watch. Okay, maybe not just trying to focus and ride all the way up towards this level, and maybe you just rather book some profits earlier. And also, what's the most important maybe in the near future is that slightly below that C2A target you have this futures gap. Okay, so if you look here, we have this gap on futures and also some gap here below from last week. So we said 2,800 is the potential support on a neckline, right? Then you have this gap, and also if you look on a smaller time frame, possibly we will see wave 4 back to the previous swing high. So I think that these levels around 2,800 up to 2,880, maybe even 2,900, that's a pretty interesting support on our retracement. Invalidation level clearly identified here, because wave 4 must not trade into the territory of a wave 1. So as long as we are above that level, this trend is expected to continue. Also, why I think that this one Ethereum could be interesting, because we can see that the Bitcoin dominance is trying to turn to the downside. So obviously some are booking, maybe will book profit, some will write out of Bitcoin into other altcoins. And if you compare that Bitcoin dominance coming down from the upper line with the Ethereum, which by the way still haven't even broke this swing highs out, then I think that there's certainly a pretty good chance that Ethereum will see more gains in after some retracement in the near term. Looking at Ripple, Ripple has came very nicely to the upside. The only question is if we'll see a straight push to new highs here for a wave 5 and then a reversal down from around 4, maybe even $5. That would be the ideal upside projection. But keep in mind that once we will see a new highs, the sentiment could be in a very late stages. Okay, especially if Bitcoin will be at the same time trading, I don't know, closer to 140, 150 levels. Then you just have to be aware of potential change in cycles. It doesn't mean this will show up, but maybe when you have this in the back of your mind, you will adjust your portfolio. And if you look at the smaller time frame here, maybe on a daily, okay, it's not really clear if that was a triangle, okay, and we are seeing straight push to the upside, or there's another very valid scenario that you are in a wave 3 and you will see a 5 subwaves up, maybe even with an ending diagonal if you see deep pullbacks in the meantime while the market could try to push higher. Still fine, but just as I look at it, it doesn't seem that we are approaching the top yet, because we still have to clear these highs out from earlier this year. Looking at Solana, someone asked for Solana. So on Solana, I've been discussing about 2 wave counts in the past. We said we could be either in ABC deeper retracement for a wave 4, okay, or what if I adjust this a little bit, what if wave 3 has ended here, that was a wave B, and that was a completed wave 4, then you will see a straight push to the upside, right? And what's good thing about the current wave development, even if you are in a wave B rally, you should see 3 waves up, which is not the case yet. So I think that there is room for push closer to 200 level, or possibly this current third leg to the upside will become extended wave 3. So I just think that in the short term it looks really nice for potential more upside, because on a smaller time frame, that's the 4-hour time frame, you can see here that we came to the upside with 5 waves, then made a pullback with 3 waves close to the 61.8%, and what's the most important, we are breaking out of this downward channel. So looks like we still have to retest these levels up here, okay? And then once we will try to count 5 waves up, maybe into some important resistance, then we'll try to figure out if that whole rise from April was wave B, or it's maybe the beginning of a new impulsive wave 5 that will take us much higher later on. So in the near term, both wave counts, both interpretations suggest we could see more upside here on Solana. Okay, traders, that's basically it. Once again, I welcome you to visit our website, wavetraders.com. You can look for forex or crypto. We cover a lot of stuff here. You can test us for a month. For only 20 euros you will get the full access, or you can just simply visit our stocks beta version of our services, absolutely free access. You just have to register and activate the access, and you will be notified when the new analysis will be posted. So traders, thank you very much again for your attention. Please make sure to like this video, to subscribe to our channel, and good luck this week, and I hope to see you next Monday. Bye.